Good morning, everyone, and welcome to Understanding New Jersey Disability Insurance. I'm Vinny Civitello, Communications Manager for the New Jersey Business and Industry Association. With us today are Tom Fascino and Jim Iannicelli of Arch Insurance. A few housekeeping matters before we get started. Today's webinar is being recorded and will be emailed to you tomorrow along with the PowerPoint for today's presentation, so be on the lookout for those. If you just can't wait to get your hands on those slides, by all means check out the Handouts tab of your GoToWebinar panel, where you can download the slideshow right now if you so choose. I'd also like to draw your attention to the Questions tab. Tom and Jim would be happy to take all of your questions, so don't hesitate to write them in as they come to you. And I can't stress that enough. Write them in as they come to you, or you may forget what you wanted to ask by the time we get to Q&A. So now let's get things started. Tom?
Thank you, Vinny. I'd like to welcome everyone today to Understanding New Jersey Disability Insurance. With me today is Jim Iannicelli from Arch Insurance. We are both from Arch, and we work in this business a lot, and have a certain amount of knowledge that we'd like to partake to you today. So let me get started here. Today what we'll cover is a brief introduction on what statutory disability is in New Jersey. You'll hear it called TDI, Temporary Disability Insurance, or TDB. You'll see different things, but you certainly know it from a deduction on your paycheck. So you and your employees certainly see that. We're also going to briefly discuss the family leave insurance here in the state and what that means to you and your employees, how this disability insurance works and who benefits from it. There are some possible law changes coming that we want to discuss and just give you the information that we know so far. We'd like to discuss your options as an employer, what you can do as far as how, where you get this coverage. And we'll just briefly talk about the solution that Arch has for, for covering the disability coverage. So today there are 5 states that require disability insurance. Essentially, it's short-term disability. So California, Rhode Island, Hawaii, New York, and New Jersey are states that have required this coverage for a long time. There are other states starting to look at it, and a few more that are coming online soon with that requirement. Many of them coupled with family leave, but currently these are the 5 states that have it. You can see New Jersey is right there with the rest. So who must provide this insurance? It's really every employer in New Jersey. So from your smallest pizzeria on the boardwalk in Wildwood up to the largest employers in the state, everyone must have this this coverage. There are a few exceptions for certain governmental employees, but outside of that, certainly every private every private industry must have this coverage. So really, what is it? So it's partial income replacement for employees who are unable to work due to a non-work related illness, injury, or disability. It pays 66 2/3 of an employee's average weekly wage, up to a maximum of $650 per week, and they receive that after a 7-day elimination period. Now, that maximum of $650 a week, that does fluctuate every year, and it's based off of where the average weekly wage is in New Jersey each year. So you'll see that move each year, and the state does publish that. So examples of people who would go out on disability: a woman who's pregnant or has just had childbirth, an off-the-job accident that may have happened that's keeping you out of work. You went skiing and you broke your leg, you're going to be out for 3 weeks. An extended illness, recovering from a heart attack, you've had the flu, something that is keeping you out of work, for several weeks, that you're seeing a physician, and that physician has basically declared you as disabled and unable to work. So I want to briefly touch on family leave insurance. Really, this is a benefit that you have in the state that provides you with the ability to basically care for others. Disability insurance is for when you yourself cannot come to work. But if you are caring for someone else, this is where this kicks in. So the majority of it is really used for really bonding with a newborn or an adopted child. and this is for the mother or the father. You've just had a child, and you want to be home for the next 4 or 5 weeks. You have that right here under this coverage. Or if you're caring for somebody else, so you have a sick family member, you have a parent who is ill and requires that you take some time off of work to care for them, this is what is covered under family leave as well. Now, it pays the same amount, so 66 2/3 of your average weekly wage, up to a max of $650 per week. Now, again, that number changes, that maximum changes every year. But the duration of this is 6 weeks in the 12-month period. So we want to briefly discuss, there are some changes coming to the laws that affect family leave and disability insurance. There's a bill out there right now, S-2528, that we've been watching for some time now, and it has some effect on family leave and on New Jersey TDI. There's expected to be a vote tomorrow, so these could actually go right into the bill could go into effect, but some of these changes may not happen for a while. So we'll go through them now, but what we'll do is we'll update all of you once this bill, if it does get passed, we'll send out an email that kind of explains what the effect is. So in family leave, this will increase the time off proposed. Everything here is proposed. Increase the time off from 6 weeks to 12 weeks of leave. It would increase the benefit from 66.7% of an average weekly wage up to 85%. It would affect businesses with 30 or more employees, as opposed to the way it is now with 50 or more employees. So more businesses would then have employees who would be covered under family leave. And it also expands the definition of family member when you're out caring for someone else. So like in-laws, siblings, grandparents, grandchild, domestic partners. So kind of expands that definition. All of these increases in the benefit would be paid through the employees through higher weekly deductions. There's currently deductions today for family leave that every employee is having to take out of their paycheck. This would increase that amount. It would not increase it on the employer side. Now, again, all of this is proposed. All of this is up for a vote, we believe, tomorrow, and so we'll see what the results of that is. So on the disability insurance side, on TDI, there are as well changes in that in the bill to change the benefit from 2/3 of salary to a proposed 85% of salary. This as well could change the maximum amount from today, which is $650, up to approximately $900 per week. Something else that could happen here is the removal of the employee consent election for when an employer wishes to move their coverage from the state plan to a private insurance carrier. We're going to talk more about this later when we talk about your options of where you get this coverage and talk about what a private insurance carrier is. And this is actually very critical to that. So we're going to kind of table this one piece here for later on in the presentation, but it is a major point here. And again, just like family leave, the increase in the TDI benefit these increases will be paid for through increased employee deductions and not by the employers. So I'm going to flip this now to Jim, and we're going to talk a bit about kind of who insures the TDI and who pays for that, and kind of what a private insurance carrier is and that type of thing. Jim?
Thanks, Tom. So what we'll look at here is the breakdown of where most employers have their current disability coverage. The way it works in New Jersey is when an employer registers to do business, they're automatically placed into the New Jersey state plan. Employers do have the option to move their coverage to a private insurance carrier. You'll see by the pie chart that 98% of the employers in New Jersey have their coverage directly through the state plan, with only 2% in private insurance. We believe a lot of this is due to employers not knowing that they do have a private plan option. The way that TDI is paid for is the state of New Jersey basically sets the rules. The contribution rates and benefit for all New Jersey employees in the state or with private plan coverage. They do set out an annual set of rates for employers and employees. So how it works is both employees and employers share the cost for the premium for TDI coverage. For 2019, employees contribute a rate of 0.17% of what the state calls taxable wages. Taxable wages are a wage cap that the state sets per employee. This year, the wage cap is $34,400 per employee. So basically what that means is once an employee pays 0.17% of the $34,400 in annual wages, then any premium payments would stop at that point. An employer's rate, however, can vary year to year based upon that specific employer's what is called claims experience. Now, claims experience is the ratio basically between the contributions that have been made under that employer's federal tax ID number versus the amount of claims that have been paid under that federal tax ID number. So, we know that every employee in the state pays the 0.17% to the taxable wages, but how does an employer know what they pay to the state? And basically, at the end of every fiscal year, which runs from July through June of every year, employers are issued notice of employer contribution rates. Some of you may be familiar with this form, others may not, but this form basically gives the unemployment insurance contribution rates that the employer will pay, and on the bottom of the form, it gives the disability insurance contribution rate that has been calculated based on the premium versus claims experience under that federal tax ID number. And you'll see at on the below that red box that this particular employer, their final disability insurance rate for the fiscal period would be 0.65% of that taxable wage cap, which is again set at $34,400 per employee. So for this particular employer, they would be paying 0.65% of the taxable wage base, and while their employees would be paying 0.17% of the taxable wage base. And again, this rate that the state sets changes at the end of every fiscal year. So the way it works in the state of New Jersey is, as we spoke about, when an employer initially registers to do business, they're put into the state plan. And all new employers start with an employer disability rate of 0.50%. And if you look at that grid over to the right under the state employer rate column, you'll see that's roughly about halfway down the rate range that the state would set. That rate is reevaluated every fiscal year, as we spoke about, based on the premium versus claims experience. The state has a rate range where, for employers, where the lowest rate would be 0.10% and the highest rate would be 0.75%. 0.10% would be the rate for employers having the best claims experience. 0.75% is for the employers that have the worst claims experience. Again, that employer rate is added to the employee rate that is set every year by the state of New Jersey.
Okay, thanks, Jim. So now that everyone has an understanding of what TDI insurance is, who pays for it, and how much you pay for it, we want to just take a few minutes and talk about what your options are as an employer. So, as an employer, you can have your coverage through the state plan. Like Jim explained, you start off in this. Every company starts off in the state plan. But you also have the option to move to a private insurance carrier and shop for, better cost, a better, you can shop for, cost savings. So you can go out in the market like you shop any other insurance and see, look at prices. You can also move to a private plan because you may just not be satisfied with the service you're getting from the state. Or you're looking to have more coverage than what the state offers. So many employers choose that. They see what the state is offering and they say, well, I'd rather have more benefits for my employees. Now, we spent a lot of time speaking to employers across the state. Many of you may have seen one of us speaking at one of the NJBIA events. And I always ask the question that, who is satisfied with the service that they get from the state, their claim service. And, I get a lot of chuckles in the audience. And the state recognizes this. They know that their claim service has been very poor. The claim, when they receive a claim to the time they actually will start working it and evaluating it for payment, it can be 2 weeks, it could be 4 weeks. I've heard many examples where people go back to work from their disability, haven't received a check, and get the check once they get back to work. So, you do have an option of what to do. You're not necessarily just stuck inside the state plan. So if an employer wishes to move out or even just shop around, there are many reputable approved insurance carriers in the state who cover TDI insurance. So to do that, you get a quote from a reputable carrier. You have to hold something called an employee consent election, which basically is asking the employees, are you willing to, allow us to move you, move the coverage to a private carrier. You sign the application and then adjust your payroll services. So the premium payment is, instead of going to the state, is going to the insurance carrier. Now, it's important to note that, why don't more employers do this? You see that the state has 98% of the employers covered under them, and only 2% were private. The majority of this is just knowledge. I think Jim hit on this earlier. Many people don't know that they have that option to move out. They just keep their coverage with the state plan. But what has been a very big deterrent is this employee consent election. And so the state put this into the law in, I think it was 1947 when they started it, and figured that since the employees are making contributions to the plan, then they should have a right to, vote on it if they're going to move the plan somewhere else. But if you look at the way insurance is today, and employees are contributing to many different types of insurance, especially their health insurance, this is lagging a little bit, and this is why this particular piece is in legislation to be updated, possibly tomorrow with this bill vote we've been speaking about. So if this does go away, this employee consent election, then really you as an employer can get a quote from a carrier, and if you like what you see and you want to move your coverage either because of price or because you're looking for better claim service or because of both, then you can go out, get a quote, and move that coverage actually very easily. I'm just going to speak a little bit about ARCH and NJBIA. So ARCH is a commercial insurance carrier, and we're here in the state in Jersey City. We partnered with NJBIA back in 2016, because the association was looking for a way that to supply the members with access to more product, more things that can help them grow their businesses in the state. So what we put together is a special plan for members, which gives you special pricing that we don't give non-members, special rates. We also will put any member into what we call an insurance pool. So that means that if you have a year where you've had several claims, ordinarily you might see your rate the next year go up. This kind of dampens that effect, because we really look at the performance of the overall of all of the companies inside of NJBIA that have policies with us. And so this kind of helps stabilize rates, for a longer period of time. ARCH also pays something called the annual assessment fee, which is basically kind of a separate tax that helps pay for for this kind of the state fund. And it's important to note that if you do move to a private carrier, there's no additional cost for employees. That is set by the state. We have to follow the rules that the state sets each year. So there's no extra cost for employees. The thing that you really gain is this faster claim payments. As I said earlier, it can take a long time to get a check back from the state or to even just get someone on the phone. This is our business. So, we do everything we can to make sure we're answering the phone in a couple of rings and that we're processing claims within a few days. So it's very important to us. In addition, you as an employer get some additional tools, access to online reporting, online FICA reports and claim reports, which just helps you manage your business better. So with that, you can see here, our rates compared to what the state might be offering. So if you look on this chart, and with the state of New Jersey, you have a 0.30% rate. With us, you'd have a 0.27% rate. If you have 15, 20, 75 employees, that small difference in rates really equates to a lot of dollars. So these are, like I said, these are special rates just for New Jersey NJBIA members. If you're interested in finding out more what it would take and what the plan is with ARCH, you can see our contact information there. We have a hotline set up, and we have a special email address set up for members to call us, and we can answer questions. And if you like, you can get a quote just to see what the difference would be. So with that said, I think we're open for questions now. I think we've kind of wrapped this up. If we didn't cover something, please send us a question, and then we can address it.
Thanks, Tom. Looks like we have a couple questions already, but I want to give everyone a moment to type in anything they have. While I'm doing that, I'd like to take a second to remind you about the Handouts tab. We get a lot of questions from people about how to download the slides, so just open up the tab marked Handouts in your GoToWebinar panel, and the file is right there. You can also just wait until tomorrow, and we'll email them to you along with the video recording of the webinar. And there's also the Questions tab. If you have a question, type it in right there, and I'll make sure our guests answer it. And don't be shy. You've got 2 experts here, so make sure to take advantage of them. Can't tell you how many times I read the post-webinar evaluations and see someone disappointed that a relevant topic wasn't covered, that the topic was too broad, that it was too in the weeds. This is your opportunity to make the webinar your own and take it in the relevant direction, we'll say, you'd like. So anyway, with all of that out of the way, let's jump right into our first question that comes from George, who would like to know, our company already tried to move to a private insurance company, but we couldn't get enough employees to sign. What are our options now?
Well, great question. Yeah, so this is, as Tom was saying, there is legislation out there to actually remove the requirement that employees consent, excuse me, to a coverage move. When the law was enacted in 1948, it was set up so that basically a piece of paper had to be passed around among workers, and original 50% plus one of employees had to hand sign these forms, and it became a very, very tedious task. We are hoping that will be going away as early as tomorrow. It's something personally I've been working on for well over 20 years, so it'd be an exciting day for me. And we just really think that it would open up the marketplace for employers to seek out the best coverage for them, not only from pricing, but from a service aspect. So hopefully that problem is going to go away, and people will just be able to, employers will just be able to sign an application form and be able to have their coverage moved.
Tara asks, we had an employee who went out on disability and was determined by the state to be disabled, and we hired him back. My question is, when we hired him back, he had some disabilities that limit what he can do and can only perform certain tasks. Does the state offer any kind of cost sharing, since now we had to hire another person to help him with his workload?
Yeah, I've spoken with many employers about these types of situations. Unfortunately, the answer to that question would be no. Basically, the disability coverage is strictly for replacement pay when the actual worker themselves is deemed to be completely and totally disabled from work.
Nancy asks, looking at the cost savings, please explain how you come up with the percent of savings.
Yeah, so we'll go back to that. Let's look at the slide here. So the cost savings is we're looking at basically the difference in the what you'd be paying today with the state and what you would pay if you were to move to an ARCH plan. That would then be the cost savings. So what we're doing is that we're reducing the rate that you would normally pay to the state. We're providing you with a lesser of a rate. So this is the piece that the employer pays, not the piece that the employee pays. That doesn't change. So what we're adjusting here is the piece that the employer is changing. And don't forget, that's the piece that changes based on your claims experience. So Jim was explaining before about how the state will evaluate you every year, and your rate will go up or down depending on how many claims you've had over the last few years. So that's where that rate comes from. So we'll determine that at that point. Now, if you are a company who has a rate that's kind of higher up in the scale there, we can still quote your case. We'll just look for different information. We want to see, your claims experience over the last 3 years and how much you've paid in premium over the last 3 years, and we'll evaluate it on our own to come up with the rate. But if you've got a rate between the 10% and 0.50, you can see that we've got our piece right there.
Yeah, and further to that, you will see that the groups with the better state experience, meaning the lower employer rates, do have a higher savings percentage. And that really is because those groups had very, very good claims experience. And our goal, as we mentioned during the presentation, is this is a pooling mentality to our rating. So we really are trying to, we're trying to offer savings to most of the groups in New Jersey, but the savings is a bit higher for the groups who had better experience, because we want to keep the overall insurance pool running in a very healthy way, so that even if an employer who had good claims experience and for one reason or another comes over to Arch and they have a couple claims that year, we want to be able to keep their rate the same, because the overall pool is running well. And so far we've been able to do that. We have not given any rate increases to any employers under the pool.
We have one here from Marissa, who asks, are bonding time and maternity leave two different time periods, and who is responsible for communicating this type of leave to the employee?
Yeah, so bonding and maternity are completely different. The maternity falls under the disability portion of the benefit, and that is for while the employee is actually deemed as not being able to work during the maternity. That's paid again under the disability. Bonding is paid for after the child is either adopted or delivered. They are and that would fall under the paid family leave portion of the benefit. It is whenever an employee goes out on disability for maternity, they receive an information letter stating what their options are for paid family leave for the bonding portion of that absence. So that's how the notification goes out.
Another one from Tara, who asks, how about the Work Opportunity Tax Credit Program? Would that apply, or do you know of any other tax credit programs?
Yeah, no, the work tax credit has nothing to do with the disability insurance or the paid family leave insurance. Both disability and paid family leave fall under the New Jersey temporary disability benefits law, which is completely separate from the other tax laws.
Here's one from Melissa, who asks, does Arch provide packages that include short-term disability for employees who work outside of New Jersey that work with the New Jersey plan?
Yeah, Melissa, we cover New York, which is another mandatory state. So we have multiple employers that we cover, across the two states. We also have short-term disability for Pennsylvania as well, and are expanding into other states at this time. So we can look at that. And the nice thing is that it's all in the same intake center. It's all, the claim forms go to the same place, and you're working with the same company on all of those plans.
Ken asks, can you elaborate on the elimination of the 50% participation rule and the vote tomorrow?
Right. So the way it currently stands is that if you were to wish to move your coverage out of the state plan today, what you would need to do is get perform what's called a wet signature election in your company. And that means you would need to get at least 50% plus one more person to sign a form that gives consent to you, the employer, to move the coverage out of the state. What we would do is once you're able to complete that election, we would take that original election, put it with the signed application for the ARCH coverage, and we would send those into the state, and the state would have to approve that. They'd review the documents, they'd make sure you had enough employees that signed, and then they would give approval for you to move your coverage out of the state plan. So if this is removed out of the law, that particular piece is then gone. So if you as the employer wish to move out of the state plan to a private carrier, all you need to do is get a quote, accept the quote, complete the application for the coverage, sign it, send it in, and we can then move coverage without requiring any other approval from the state.
Cool. Another one from Marissa, who asks, is the insurance pool for TDI only?
Yes, it is, Marissa. We in New Jersey, we're only covering the TDI. We do not cover the paid family leave. So what we're looking at and what we've been talking about relative to what ARCH has for NJBI members, it's only the TDI coverage, and the family leave coverage is through the state plan.
Linda asks, if the weekly benefit increases on TDI and family leave, can we expect our employees to be out of work longer?
Yeah, so that's certainly a possibility. And, as an employer, I know many employers have concerns about that because it's obviously a disruption today when you've got employees who are out for extended periods of time, either on disability or on family leave. A higher benefit could certainly mean that people could be out of the office longer. We have seen in our own statistics, we cover the paid family leave in New York, and even though there's an 8-week duration, maximum duration on family leave, we notice that most don't take it. So people, people do need to get back to work. Obviously, these benefits aren't 100% of salary. So anyone who is out on family leave or on TDI, it's certainly a financial burden because you're not receiving your 100% salary. So there is still incentive to get back to work. Although, I would say that, you certainly could see people out longer.
Frank asks, is the 12-month period a rolling period?
Yes, it is a rolling 12-month period. So basically, if you were to go out, let's say, well, we'll use February 1st as an example, February 1st, 2019, you would be eligible for up to 12 weeks, and then those weeks would begin to drop off as of February 1st of 2020, and you would be able to then have additional benefits.
James asks, it appears that businesses under 30 employees do not have to participate in family leave. Do they still have to contribute to it?
No, if you're not required to have the coverage, then you're not required to contribute to the cost. Now that is strictly for paid family leave. For disability, all employers, down to one employee, must have the coverage.
You may have just answered the next question too, but I'll throw it out there anyway just to be sure. Mohammed says, I'm a self-employed one member. sorry, I'm a self-employed one member. My understanding is that I don't need TDI. Is that correct?
Correct. TDI is only for employees of companies. It's not for owners.
Lauren asks, do you provide both disability and family leave insurance?
Not in New Jersey. We are only covering the TDI in New Jersey. If you have employees in New York, we do cover both in New York. It's strictly just the way that the state sets it up. It's that we choose to just cover the TDI. New York is a completely different story. It's more mandated that us as an insurance carrier have to cover the family leave in that state. But currently we are not. If that changes going forward, we'll certainly send communication out to all of our policyholders and all of the NJBIA members.
Speaking of New York and New Jersey, Cheryl asks, we are a company that has employees in Pennsylvania working at a PA location. What are the disability options for those employees?
Yeah, so in Pennsylvania, they do not have mandatory disability laws in Pennsylvania. However, many employers do have short-term disability policies, and we do see employers that have, in a situation like yourself, where you've got employees in New Jersey and you want to offer the same coverage in Pennsylvania. So we can do that. We have a short-term disability policy for that state, and then what we could do is provide you with the same coverage for those employees in that state.
Phyllis asks, what are the proposed changes for expanding the definition of family, similar to the paid sick leave?
Yeah, and I don't have all of them in front of me. We'll have to see what the legislation passes if it does go through tomorrow. We'll send a communication out to everybody on what actually passes. What I had read is they were going into expanding it to in-laws, expanding to grandchildren, grandparents, siblings. So if I had a brother who had God forbid health issue and he needed me to come around and take care of him, that would be considered caring for a family member. Or if you have someone who has grandchildren, and they're working, and the same kind of thing, expanding it to grandchildren, domestic partners as well. But this is all kind of up in the air right now until we see what legislation actually gets, if it does get voted on, and then what actually passes. So we just kind of wait and see on that.
To follow up that, Ken asks, if it was voted in favor tomorrow, when would it take effect?
Yeah, so the bill would take effect immediately, but not every piece of it would take effect immediately. So the employee consent election would go into effect immediately. So so we have employers now who are quoting insurance, with us to go effective April 1st. And if this were to go through, they would not be required to have that employee consent election. That would be in place immediately. As far as the benefit increases, what we have seen in the bill, as certainly for TDI, the benefit increases would not go into effect until July 2020. But again, I'm couching that, because we don't know exactly what will get passed. If anything might change between now and the time that they sign it. But that's what we've been reading. So it is kind of, some are now, but most of the benefits themselves are changing basically a year and a half from now.
Elizabeth asks, if an employer moves to TDI to a private insurer, is the 0.17% still paid to the state of New Jersey? And does an employee apply to both the state and the private insurer to receive benefits?
No, the contribution from the employee would then come to the private insurance carrier. It would stop going to the state. Your payroll company would make that change. And as far as claims are concerned, all the claims would go to the private insurance carrier directly. They would basically not have any dealings with the state relative to TDI. It would all go through the private carrier.
Melissa asks, is private coverage available for employers with more than 250 employees?
Yes, absolutely. The only difference is what we have to do for groups over 250 lives is what's called experience rate the cases. We would get the historical premium and claims data from the state, and then we would calculate a rate that's required for that coverage. The difference being that we just don't have a set rate for groups over 250 lives, but we write those groups all the time.
Mary Beth asks, is there a max ER rate that Arch would charge employers?
No, there is not. There is not. We are, however, always cognizant of the rate that an employer can go back to state plan coverage for. So we make every attempt to not go higher than the state maximum rate, but there are instances where a higher rate is required.
Another one from Phyllis, who asks, is the notice of employer contribution rate sent through the mail, or is this something we need to look up on their website?
I know they are. The state is required to send by mail. They do have a website where you can go in and sign up and be able to get that form. I know they were having some issues with the website at one point, but I believe they've gotten that straightened out. So you can go online and get that.
Jennifer asks, what happens if we move to a private plan for TDI and we don't like it and want to go back?
Well, you can move back. You can always go back to the state. Now, I believe that if you go back within the same year, you go back at the rate that you left at. If you go back, and I'm looking at my colleague here, if you go back after that, let's say it's 3 years later, I believe you're coming back in at the 0.50% rate. So basically that middle rate. But yeah, you always have that option, so no one needs to feel like they are trapped and they can never go back to the state.
Deani asks, how do you determine the cost every year? Is it the same as the state?
Well, basically, what we do is if you're under 250 lives, we're strictly using the grid that is provided. What happens is if the overall plan experience, or what we've been referring to as a pool, goes over a certain threshold, then any employer who had less than desirable experience would perhaps see a rate increase. At no point would an employer who on their own merit has very good experience see a rate increase, even if the pool in its entirety had unfavorable claims experience.
Another one from Deani, who would like to know if the forms are available in different languages and if customer service is available in other languages to employees as well.
Yes, our customer service department does speak several languages, and we have the forms in multiple languages. If there is a point that someone is contacting us with a language that we may not have immediately available in our call center, we do have services that we can use to to communicate several languages.
Another one from Nancy, who asks, can an employer supplement the employee's TDI payment using PTO so they receive 100% of their weekly wage?
Yes, absolutely. The employer can pay the difference between the disability payment and the 100% salary.
And in addition to that, we can have the claim checks sent to the employer, so they can help supplement that. But yes, that's correct. They can pay the full salary on their own.
Patricia asks, if we hire an independent contractor in PA for 6 months, since Pennsylvania does not make disability coverage mandatory, then I don't need to cover this contractor, correct?
Yes, that's correct. The work state always determines the coverage requirement. So if the person is working in Pennsylvania, there would be no coverage requirement for that person.
Another one from Marissa, who wants clarification on employers with employee counts under 30 are not required to provide family leave insurance?
Yes, that's correct. Actually, it's currently under 50. New legislation would drop that number to under 30. Proposed. Okay, I always have to say that because we have to see if the bill gets signed and what actually will be in the bill. What we saw proposed is under 30.
Kind of the inverse question from James: can businesses under 30 employees participate in family leave if they choose to?
That is a great question, and because Arch does not handle the paid family leave coverage, I don't know if there's a voluntary option. What I would recommend is the state has a very good website out there that if you just go in and type in New Jersey Department of, or Google New Jersey Department of Labor paid family leave coverage, they have many FAQs out there that should touch on that subject.
Gary asks, my wife and I are the only employees of an S Corp, of which I am part owner. Do we need TDI?
A lot of that depends on if you're actually receiving W-2 and reporting W-2 wages. It's generally tied to if you're submitting a W-2, then you would not be considered sole proprietor and would have to have that coverage. But there are a lot of different laws regarding S corps, LLCs, LLPs, partnerships. But generally, the rule is if you're a W-2 employee, you need to have the coverage.
Patricia asks, do these coverages include part-time employees?
Yes, absolutely. All employees are required to have the coverage.
Dave asks, we've had employees who went out on disability and didn't get any checks from the state until they returned. How do we know that that won't happen with an insurance company?
Yeah, good question. So, bottom line is just like us and any other insurance carrier, we want to stay in business, and claims is our service. So we do everything we can to pay claims very quickly. We measure the amount of time we are taking to pay our claims, to answer the phones, to get everything processed as quickly as possible. So, yeah, we have a lot of incentive to do that, and we watch those numbers. Our claim payments average 4 days from the time that we receive the completed form in-house the time that we make determination and a check is in the mail. So, we're very diligent about that. Here at Arch, and I know other insurance carriers the same thing, very diligent about that. That's all part of why we're in business. So.
All right, I've got one here from Michelle, and just give me a second because this is broken up into two parts and I'm going to combine them. So if the company chooses to provide private insurance, are they required to provide a minimum 66 2/3% salary replacement? Would a plan with 60% salary replacement meet state requirements? And is that a minimum amount determined by New Jersey law?
Yeah, the state does require that any quote-unquote replacement plan, such as a short-term disability plan, must meet the state-mandated requirements in every aspect. So, for instance, the required New Jersey plan is 66 2/3% to $650 a week max. I get calls from employers, well, I have a 60% plan that covers up to $1,000 per week, so that should be better than the plan, and the state would not accept that as a replacement plan because the percentage of salary is less than what is required under state law. So that would not be a replacement plan.
Another one from Marissa, who asks, we have less than 50 employees and received a claim for family leave insurance leave for bonding time after an employee's TDI maternity leave. If we are not required to have it, how is that possible?
Well, the employee can certainly get a claim form and submit it, right, and start that process. I would expect, and I'm looking at my colleague, that the state would catch that employer is not contributing and would not go forward and process the claim. But certainly, and we've seen this in our own shop where we've seen people submit claims that don't have coverage with us, or coverage has been moved or canceled or something, and we still get a claim. It's someone can certainly go on our website, get a claim form, and fill it out and send it in. But it's really the question is, if you have state coverage, why did the state actually approve that claim? So that's really where it should have been checked.
One more from James here, who asks, if a company only has 4 employees and 3 of them are 10% or more owners, can the 3 participate in TDI?
Again, it comes down to really the definition of the coverage requirement is for employees. So typically that would be W-2 workers.
Well, that looks like all the questions we have, so I think it's as good a time as any to bring things to a close. Don't forget, all of you will be receiving a recording of today's webinar and the PowerPoint slides via email. Lastly, when you close out of the webinar, a survey will come up on your screen that we hope you'll fill out so we can understand how to best provide you important information in a webinar format. So until next time, for Tom Fascino and Jim Iannicelli, this is Vinny Civitello thanking you for being with us this morning and wishing you a great day.